Hey guys, welcome back to the channel where I'm selling options until we hit $1 million. Let me start out with saying that there was no video last week. I apologize about that. If you're in the north or even most of the south, east US, we had some pretty big snowstorms and ice storms last weekend. My power did go out for a few hours. Hopefully you guys didn't get hit too hard, but I had a couple friends that decided to do a snow in day and stay at my apartment. I'm down here in Texas, so we just had a couple inches of ice, but it shuts down the roads. People get into accidents. So I was like, I didn't really want to be like, hey, let me leave you guys into my room and record a YouTube video for my 82 subscribers. So no video last week, but a lot has happened that I will update you guys on this week. Which, to state the obvious, lots of red, lots of market turmoil that we're going to get into. But I've been actively buying in a lot of realizations. I mean, as you can see, the portfolio is sitting at about 281,000, with Friday being a pretty red day, almost down 1%, 2.65K. Um, I will remind you guys, in 2025, we made over $42,000, up 15%, and 2026 year to date, we were up about 1.6%. And now, over these last 2 weeks, we are in the red. We are negative because of this market pullback. We'll get into the stock specific later in the video, but there really hasn't been any news on the stocks that I've been trading. But they've been getting hit and they've been going down. So 2026 year to date, we are now down 1.53%, or 4.3K. In the last 2 weeks, we've lost almost 9K since my last video, which is not good to see. I mean, it sucks to see red, but times like this is when we, uh, you know, continue trading to our trading plan. I knew what I was getting at. I knew the risks, and this is what I do. This is the plan, and it's also good practice if I hope to live off this strategy one day and quit my 9 to 5 job. So market pullbacks are going to happen. This is buying opportunities. I see it as stocks trading at a discount. But the last 2 weeks have been very active. Over 2.4K realized in premiums. Including CEG 1100, Reddit, which was a weekly play, 394, Palantir, Robinhood, IWM, also a weekly play, and SoFi, which thankfully my puts expired before the big pullback. But again, looking at SoFi to sell some puts, but we'll get into that later in the video. So again, this is the wheel selling option strategy, where we start at the top, we are selling puts, and then now, as you can see with all the red, and a sneak peek into this video, is we got a sign. So we'll be selling calls now on the stocks that we had to buy on the contracts that we sold. So you start at the top, sell puts. If the stock price drops below the strike price that you sold the put at during expiration, you have to buy 100 shares of that stock per contract that you sold. Then I turn around and I sell calls until the stock price goes above the strike at the expiration that I sold the contracts at. Then I have to sell them at that price, and then I restart. 100 shares per contract. And again, none of this is financial advice. Please consult a financial licensed professional before making investment decisions. So going into some of the news, that this is broad market news, nothing stock specific that I have been selling puts on, but Bitcoin dipped below 79K. Market digests silver trade-off, Trump's Fed chair pick. So Trump announced his new Fed chair pick, who will replace Jerome Powell and set the central bank's monetary policy, which includes interest rate hikes or cuts. And if you know Trump and what he's been talking, this has honestly been a surprising Fed pick, because the Fed pick does believe in an independent Federal Reserve away from presidential influence. But also, do you really think Trump would pick him if he didn't have influence over him? Because Trump wants cheaper interest rates. He wants to stimulate the economy. He wants cuts, more buying, more stimulus, more money, which will probably end up with more inflation later on the ride, but not during his presidency. So the market is still digesting that news, whether it's good or bad. They really haven't decided, but it's been going down. It's been having a pullback. You saw silver's drop 30% in one day, gold about 10%. I mean, it's the largest precious metals one day drop since the 1940s or 1980s. I forget which one, but it's been many, many years. And Bitcoin kind of followed that sell off, and so did a lot of the broader market on more news with Iran warning of regional conflict if U.S. attacks, designates EU armies as terrorist organizations. I mean, there's a fleet of U.S. ships heading towards Iran right now. The market, that is not good news for the market. Iran is a very powerful country, and it could lead to World War III. So the market is having extreme fear over that, and as well as a partial U.S. government shutdown, likely to continue amid funding standoff. Speaker Mike Johnson is convinced the impasse over the Homeland Security funding will be resolved by Tuesday, though. So the U.S. government is partially shut down again because there are a few, Democrat and Republican uh, disagreements over Homeland Security funding and over ICE, as well as a few other things. But the Speaker of the House, Mike Johnson, is convinced that it will be resolved by Tuesday, which will be good news for the market. But again, this past week going into it, not good news for the broader market and macro. So I like to quote Warren Buffett during times like this, where I'm selling everything because it's over. I'm just kidding. I'm not selling. That was a bad joke, but I'm not selling. I'm actually buying. This is when you there's when this is when there's extreme fear in the market, and I'm buying when there's fear, and I'm selling where there's greed. So right now there's a lot of fear, so I've been buying a lot. And one of those is J.P. Morgan Chase. It had a nice pullback over here due to the Trump's decision over capping interest rates on credit cards, and a lot of banking stocks and financial stocks that have credit cards and make revenue off of their insane interest rates, up to 30% interest on some of these. Trump wants to cap it at 10%. That's going to be a significant hit to these companies. So they had a nice pullback, and I've traded JP Morgan in the past. I believe in them long term, and the credit card segment is only one part of their overall massive institution and financial hegemony over the world financial system. So I believe in them long term, and I sold a 305 put. So I'm going to have to buy $30,500 worth of JP Morgan if by February 13th it drops below that strike price, that blue line right there. But right now it did dip below, but it's bouncing back a little bit, and it's sitting right above the strike price that I sold the put at. So kind of in between the 90-day simple moving average and the 200-day, that green bar and that orange bar. So technicals are still showing a positive trend up. RSI below 50. So I'm comfortable buying it, as I believe it is a good value play, and we are break even on it. Talon Energy Corp. This is a new one, and this is another power producing company and power generation company. That you might say, but I'm already trading a few other power generation companies. Is that not too much exposure? And you know what? I have thought about that, and I just couldn't resist. It's had a nice pullback. It's been trading in a range. I'm sold a $345 put expiring February 20th. I saw this drop on Friday. It dropped another 4% on this red bar, and I just couldn't resist. I pulled the trigger and sold one put contract. RSI sitting in the 43 below 50. It's sitting above the 200-day SMA, and this is a company that I'm comfortable owning long term, and I would actually like to get a sign. There's been some very strong bounces off of the 345 level here. It's been serving as a support for quite some time. I mean, going back to the summer, August and September, it served as a support, and then all throughout November, December, and even right now in January, February, it's testing it. So we'll see if it keeps bouncing off. But this is also a play for the big data centers. I mean, we are going to need so much power for them, and we don't have enough. So these companies, I think, are going to keep doing well and keep growing their revenue. BWX Technologies. I sold a 195 put for BWX. The ticker symbol is BWXT, and this is actually a company that makes also a power company in the segment, but they're nuclear power. They manufacture nuclear components and also service nuclear power plants. They're a pretty big company in the U.S. and they have contracts with the U.S. Navy and governmental contracts, which is a consistent cash flow and it's long term too. So as you can see, the stock has been exploding because also the power needs in the U.S. We're about break even. I sold 195 on that blue line right there. I think that the last time I traded the stock on the channel, we sold a $160 put. So the stock has run up pretty nicely since then, but it's had a nice pullback, and I'm selling a pretty safe put. A little safer would be at 190, which would be at the 90-day SMA. If you want to go more aggressive, you could sell at the 200, where it's the short-term support and it's been bouncing off of. But I kind of chose in between that at 195, which these are premiums that I'm comfortable getting and at a strike price that I'm comfortable owning the stock price if it does dip. But unlike the other stocks, this one did have a slight, you know, overbought territory with RSI above the 70s, and it's dipped below, but it's still above 50. It's not below 50, but it's still I'm comfortable buying around 50. I'm not comfortable buying if RSI is above the 70. And this indicator basically shows if the stock is overbought or oversold. And if it's above 70, that top bar right here, it is overbought. If it's below right here about 30, exactly 30, sorry, then it's oversold. So this stock's kind of trading in that in between around in the 50s level. So believe in the stock long term, about break even on it. We'll update you guys how the stock keeps going and trending. Credo Technology Group. This is a stock also that supports the data centers, and they actually make all the specialized wiring, fiber cables, all the intense, massive amounts of cabling that needs to go into all these data centers in the U.S. and worldwide. And I sold 125 put, which we are down. I mean, we're down about $700 on this, but it's been having a nice range. It has gone rejected in the 200s level, but it's pulled back to about 125, sitting below the 90-day SMA, but above the 200-day SMA. And really, I mean, there hasn't been any real news on why the stock has pulled back. The RSI is in the 30s, which is a much better buy, in my opinion, and it's testing my strike price right now. It's probably going to test the 200-day SMA, but this stock really this last 2 weeks has just pulled back because the broader market news. There's nothing specific about it. There actually has been semi-positive news about the demand that it's going to have and that it's having. So I decided to sell actually 2 puts. So I doubled down on another red day. Sold one maybe over here at the beginning of the week, and then sold another put contract at the end of the week when it dipped 2 or 3 more percent. So comfortable owning this long term. We're sticking to the plan. 700 looks rough right now, but I will update you guys as it progresses. So now, moving into some good news. Nucor Steel, the number 1 steel company in the US, also benefiting from all the data centers that have been building because they require a ton of steel. But as well as, I mean, if you know the steel industry, it is cyclical. And we actually held Nucor through their earnings. That was this big one-day drop right here at the end of January, which a very strong bounce. I mean, look, it sucked to wake up in the morning and seeing that the stock was back at the strike price that you bought at a year ago. But it had a really strong bounce as people listened to the guidance and fully digested what it meant for the stock long term and what news the Nucor Steel actually reported. And they warned us. They said, "Hey, Q4 steel is cyclical, and usually there's a little less demand in Q4. So they did miss earnings, but nothing surprising. But guidance was good over the long term, and uh, going into Q1, Q2, they're pretty positive that demand is going to pick right back up. So that's why the stock bounced off and it's sitting at 177. And this stock would fall into my long-term tax bucket, long-term capital gains. So we're up 9.13% because we've held the stock longer for a year. We've been selling some covered calls on it to collect premium, but we are up about $1,500 on Nucor steel. And I think I'm going to sell in the 190s or 200s, at least when it hits near an all-time high. So that's my plan for this stock. Hopefully that's within the next quarter so I can free up that capital and start selling puts. But this stock is nice too because it hasn't been following all the tech sell-off, precious metals, Bitcoin. It's actually been having a pretty solid green week. And over since this bottom, it's up, I think, 45%. So we've captured 9%. So definitely bought it pretty early, but it's hard to time the market. But happy where my strike price is. And we'll continue to ride this wave here. Now, Robinhood. This stock had positive news this week with analysts increasing their target buy and increasing their rating on the stock. And let's see. So we've sold 3 contracts on this. 2 at 110, one of them got assigned, and another one at 100. Those are the blue horizontal lines. And this is not a very good sign that even on the positive news, it went below the 200-day SMA. Their earnings are coming up, which it looks like we're going to have to play with some shares. But unless there's a green week, we're going to get a sign on this 100. We're going to get a sign on this 110. My cost base is going to be about 105 with all the premiums that we received. And the stock is trading under 100. It's trading at 99.48. And if you know, stocks do like those even numbers. So, I was expecting a nice bounce off of the 100. That's why I sold a put there. But it's also, testing a pretty long-term support level here. I mean, if you look back in August through September, this is the price about 95 to 100 is the price that the stock has been bouncing off of. So it hasn't seen these levels, in months since August, since the summer in September. So looking at it very closely to see how this stock reacts. Another one that's been having a pretty large sell-off, which is Bitcoin. And you guys have seen me on this channel trade IBIT, which is the Bitcoin ETF, the iShares Bitcoin ETF that follows Bitcoin. But I also started putting some positions on a 2x leveraged Bitcoin ETF called ticker symbol BITX. And I'm showing a Bitcoin chart, not IBIT and not BitX. As you can see, this large drop over the weekend. I mean, before it was going into, it was sitting at about 84. But we had a huge sell-off happen, some a large amount of outflows from Bitcoin. So the stock, the Bitcoin in itself is under the 30 RSI. I mean, it's in the oversold territory. But I want to buy more, but it's already such a large percent of my portfolio that for concentration reasons, I just don't see how I can, even though I really, really want to at these levels. But we'll see if it reaches in the 60s. I'm going to have to take a couple additional positions, whether that be in the 2x leverage ETF, which do at your own, be cautious about it. Do it. What's the word I'm looking for? Do it at your own risk. So it is a leverage product that is meant for short-term trading, not long-term investing. It goes down over time. But IBIT, I'd say, is a much safer way to play this if you have a brokerage account and don't want to buy Bitcoin on like Coinbase or something like that. So, not any real news. I mean, I thought the dollar's been weakening. People view this as an alternative currency, kind of like some people did view it as a safe haven. Clearly, it's not. Like they did precious metals like gold and silver, hence the run up, dollar weakening over this last couple of years, run on Bitcoin, or excuse me, run up on gold and silver, which is a safe haven asset during market turmoil. But then again, it went down. Silver went down 30% in one day. Gold went 10% in one day on last Friday. So, you know, what is a true safe haven, and what news will it take for Bitcoin to pick back up? So some people expected it to be once gold and silver pulls back, that capital is going to get out of precious metals, and that capital is going to go into cryptocurrencies, including Bitcoin. But clearly that didn't happen. So still a buyer, still believe in it long term, but it is looking pretty rough in the short term, and I think it's going to keep going down in the 70s, until it finds their next support level. So Reddit, the weekly play. I wanted to collect about $300, about $400, excuse me, in premium on a Reddit stock, and we're ending up down 2.6K currently. Technicals are rough. I'm not gonna lie. It is probably going to fill this gap. It's probably going to go into the 140s, and it looks like we're going to be playing earnings. So a weekly play, we collected about $400, about 100 shares at that 210 strike price. So our cost basis is 206, and the stock's trading at 180. So we are pretty heavily in the red on this stock, and again, no real news on this pullback. People just say that people are taking profit because of the run up and the market, the broader market macro. So nothing specific about Reddit. Some people also say it's insider selling before the earnings report that is going to come soon here in early February with Reddit. But again, I mean, this is why you have to be comfortable buying where you are, where you sell a put option. So 210 sold a put option. I'm comfortable with owning the stock there. I think long term it's going to go up, and we're going to continue to sell covered calls, which is nice with Reddit. It has high premiums because of its volatility. So I knew this before going in, and we'll keep you guys updated on through their earnings report, whether it's next week or in 2 weeks. I forget. Palantir. Palantir had no true bad news, but they do have government contracts, including one with a couple, well, more than one, but a few with the U.S. government and the funding over Homeland Security and ICE. The stock has been taking a hit on because that means less money that Palantir gets, but in the broad scheme of things, that's only a very small section of their revenue, is that specific contract that they do with ICE agents. So honestly, the broader market has been affecting it way more than any stock specific. But this is another one that we got assigned on. We sold a put on it about a month ago at 165 strike price. And it looks like we're going to be playing through earnings also, which, as you know, on this channel, one of my rules is we don't sell options through earnings. So I will not be selling a call. But I mean, I've debated buying a put, a protective put, which I haven't done in the past because I think it's kind of against the rules of the strategy and takes away from the gains. But it does. I do wonder, like, is it worth it to hedge? Will I do it? Probably not, but it is something that I'm thinking of and looking at doing. But I think their earnings will be good, but time will tell, and we'll see what actually happens. But there are some valuation worries on Palantir. But again, company that I'm happy to own, and it's a small percentage of my portfolio, but still sucks to see this red number. Constellation Energy. This is another power play, and we actually got assigned early on this one. We had a contract expiring, I think February 6th, that we sold about a month ago, and this stock has been taking a hit. This is another power generation company, and actually the largest nuclear power plant operator in the U.S. And they had a couple of news 2 weeks ago where Trump basically came out and said that the cost of power will not come down on the user to bear, the ratepayer, but the hyperscalers, like the big tech companies like Apple, Microsoft, Nvidia, that they will have to pay, not your average person or ratepayer, for electricity prices and the increase in them. So that took a hit on a couple, on the uncertainty of what that would mean and what Trump has in plan to achieve that. So trading below its 90 and 200-day SMA. We'll see until the next support level. It might go down to the 200, but this is a volatile stock, so we will be selling covered calls on it. But we have another month until earnings. So as you can see, we are about 13% cash right now. So we have been heavily deploying and buying, but still can, deploy a little bit more capital, about 37 grand. But this is the part where we are sticking to the plan. We are deep in the red, but this is what the strategy does. The market's going to have pullbacks, and it's going to be a good test. So we are 28% of the way there. I appreciate you guys, all of you, for tuning in. This is, it's not easy to see red and a big pullback, especially in a short amount of time, but this is a part of the strategy, and I look at it as stocks being at a discount. I look at it as a buying opportunity. I hope I am right, but time will tell. But I'm happy to own the stocks at the prices that I sold them, or else I would not have been trading them if I thought they were overvalued. So I will keep you guys updated as a couple more earnings reports come out and another week in the market. And I wish you guys all good luck out there selling puts and calls. I'll catch you guys next week.